Hey everybody, week 5 of 2023 is a wrap. So we've got a great portfolio, lots of things to cover this go around. So let's go ahead and jump into it. But first, a brief background. My name is Wayne. I'm 44 years old and I retired in 2020 after a rewarding career in law enforcement. And truth be told, I thought by making $104,000 a year with my pension, I'd be living the dream, but that was not the case. It's not to say that I couldn't live off of that pension, but living and living comfortably are two different things. So I've gone back to work full time and I intend to do things differently this time around. First, I'm saving more money than I ever have. Second, I'm taking full advantage of tax deferred contributions offered by my current employer. And last but not least, I'm investing every penny I can in the stock market. And I'm doing so to generate multiple streams of income to build generational wealth. So once again, thanks for tuning in. Let's go ahead and start with the M1 portfolio. You guys can see I currently am sitting at 119,000. This week, I finished just about 0.64% above last week. Not too bad. If we go over to holdings, you guys can see for an all-time unrealized gain, I'm just up about 1%. Let's go back to activity, and I want to show you guys some buys that I made this week. You guys might be surprised to see that I made some sells as well. So let's go ahead and open up each of these, and I'm going to go ahead and break down what I bought for the 5th week of 2023. We'll start with this past Friday, and you'll see here that I bought 9 stocks. So McDonald's, Walmart, Visa, Exxon, Texas Roadhouse, Johnson & Johnson, Lowe, the Southern Company, and AVGO. All of the usual suspects that you guys have seen throughout the month, actually throughout the entire of 2023. Let's go ahead and jump into what would have been the first. So this week we had the end of January, the beginning of February, and once again, guys, we're seeing the same 9 buys throughout the week. Again, January 30th, we're seeing the same 9 buys throughout the week. But this one right here should look a little bit different. And guys, yes, I did make some sales from my portfolio. So we're going to break down what I sold, why I sold, and you guys know I put out a video about a month or so ago and asked the question, do I hold too many dividend stocks? My M1 portfolio had about 51 holdings, and yes, I did make some cuts, but we're going to kind of explain how these cuts don't necessarily affect the overall annual dividend that I'm receiving. So let's go ahead and start with the big one right here, which is SDY. This was in my, and I'll go ahead and navigate, in my ETF slice. And I had SDY in there. Truth be told, guys, when I started analyzing my ETF slice, I quickly realized that I had some duplication going on. And duplication amongst ETFs is bound to happen. But I had a little too much, and in reality, a lot of my bigger holdings, SDY just seemed to be the most logical to cut. So I made that sell. I've got no regrets. One of the things that I also looked at with SDY was the expense ratio, which was far more than the other ETFs. So that had to go. If we look at gain, I only had, a very limited amount of stocks, about $140 worth. That was one of my monthly pairs. Again, if we go back here to my slices, you'll see here in my monthly pairs, I've got 5 solid monthly pairs. I haven't talked about Horizon too much, nor Glad, nor ADC, but I did do a recent video on my 3 favorite monthly pairs. Stag was included on the list. Maine was on there as well. So I sold off Gain because, to be honest, I could easily take that money and roll it into another monthly pair like Maine or Stag that I'm way more comfortable owning. Target, you might be saying, Wayne, why would you get rid of Target? Why would you get rid of Starbucks? Why would you get rid of Apple, Microsoft, and Costco? These were giants, if you will, in my long-term hold slice. So if we back out and take a look at the current look at my long-term hold, again, I've made those trimmings. This is kind of an easier one to explain. So Target, Starbucks, Apple, Microsoft, and Costco, I currently hold these stocks in my Robinhood brokerage. And it seemed to me at the time oh yeah, no big deal. I hold 100 or 200 shares of these stocks in my Robinhood, but guess what? I want them to be in both portfolios. So at the time, I kind of told myself, yeah, you know what? I'm duplicating, but it's Costco or it's Starbucks or it's Apple or it's Microsoft. Why wouldn't you want to duplicate? And if we look at the other stocks that are actively in my long-term hold slice, a lot of these positions are so new, right? Texas Roadhouse, Walmart, UNP, Exxon, Lowe's, right? So I'm working to build up that long-term slice. It didn't make sense for me to have duplication given the fact that I've got other stocks that I could easily fund by selling those off. So again, I owned Costco, I own Microsoft, I own Apple, I own Starbucks, and I own Target, but I own all of these in my Robinhood brokerage. And some of these I have upwards of 200 shares. So Microsoft, I own 200 shares in Robinhood. Apple, I have 200 shares as well. Starbucks and Target, I own 100 shares each. In Costco, I am currently daily cost average buying in my Robinhood brokerage. And I think I've got about 11 shares currently. I'd like to get that Costco up to 100 shares as well. So these were easy decisions to make because again, I already have these in another brokerage. The last one here, or the last few, EMB, again, guys, I have other holdings in my M1 that seem to be kind of counterintuitive. So rather than having, duplicate holdings from the same asset class or the same types of stock, I was like, you know what, let's just go ahead and focus on the best BDC, or let's go ahead and focus on the best restaurant, or, the best retail, or the best fast food place. So I sold off ENB, I sold off BBDC, and last I sold off Devon Energy. Devon was one of those stocks that I really enjoyed the solid dividend, but what I noticed is the dividend was not consistent, meaning the payment was not a static amount. It would vary from quarter to quarter. So I made the decision that I've got some other holdings that do a much better job in that sector, so I sold off Devon as well. And in doing so, I was able to generate $2,500, which immediately after the day that I initiated the sell, it made the buy for these 14 stocks. So the same 9 stocks that you guys have been seeing week in and week out, but I also picked up a few more stocks that have not been funded. And the biggest one that I added here was ADC. ADC is a REIT, and it does pay a monthly dividend. So if you look at this, you guys can see here ADC is currently $74 a share. Kind of breaks down what this is, and I added this slice to my monthly dividend payers. So in my monthly dividend payers, guys, I have Stag, Horizon, Main, Glad, and ADC. Now I had JEPI and JEPQ in the monthly slice as well, but technically they are ETFs. So I have moved over those ETFs to the more appropriate slice as far as title. And in that ETF slice, you guys will see here, I've got a pretty healthy holding of both JEPI and JEPQ. I've got SPY-D, SCHD, Devo is the one that I just added as well. I saw this from watching the Average Joe Investor, and if you guys haven't seen his content on YouTube, he is doing a fantastic job with comparing ETFs that are out there and very popular amongst the dividend investing community. And he made a believer of me that I absolutely needed to add Devo to my portfolio. So yeah, I added that recently. I've had VTI, SPHD is technically a monthly pair as well, and I've got VYM. So currently, guys, I'm very happy. Let's go ahead and take a look at the total amount of holdings. And by selling out the other positions, I now have a total of 43 funded positions. I say funded because I do think I've got 1 or 2 more in the quarterly dividend slice that have not yet been funded. And again, my top earner, if you will, as far as cost basis, or no, actually, sorry, value, is OCSL. So OCSL, I've got about 20,000 in holdings. And if we go all the way down, you guys, this is going to be, amongst the newer stocks that I've added. So Texas Roadhouse, Walmart, Union Pacific, ExxonMobil, Lowe's, SO, Johnson & Johnson, AVGO. So all of these are newer add-ins, and guys are slowly but surely being funded. Which also reminds me is you guys know that I was currently contributing $50 every Monday, Wednesday, and Friday. Guess what, guys? I made a decision that I need to be more aggressive in my investing. Clearly, I have a goal of reaching $15,000 in annual dividend income. And the only way I'm going to get there, I think, at this point is to really step up my game. So I added $50 on Tuesday, $50 on Thursday. So now I am contributing a total of $250 every week. I think that is going to get me closer to achieving that goal. And so I'm really excited about that. You guys know that I like to split up those buys into, I was doing 3 days a week, but now I'm doing 5 days a week. So I'm excited because I do expect some dividends to start rolling in. And we're going to talk about dividends, but before we do that, let's go ahead and take a look at Robinhood. And we finished for the week, guys, pretty strong, right? Currently, the brokerage is at about 403,000. We saw a nearly 3% increase for the week. That's $10,000 in gain. Not too bad. Let's go ahead and take a look at dividends. So I'm going to go ahead and take you guys back to M1. And I can tell you right now, I do not believe that we had any dividends for the month of February. So the last dividend that I received was January 31st. So no dividends yet in M1, but if we head over to Robinhood, we did receive a few dividends, and starting things off right was Verizon paid me $65.25. That's from owning 100 shares. CVS paid me $61.09, also from owning 100 shares. One of the things I did too, just to note, in my Robinhood, I turned off dividend reinvesting. So this money is going right into my brokerage account. And I'm not really, at this point, buying anything other than Costco and UPS. So everything that's being generated from dividends technically is going to either UPS or Costco. And that was it for the first week of February / end of the week for January. If you guys didn't know, last video I put out a monthly tally on how much dividends that I've earned. So if you guys didn't get a chance to check that out, I'll give you a quick summary. I earned a total of $601.79 for the month of January. That broke down to be more earned from Robinhood and only $52 from M1. Guys, remember, I've transferred over almost all of my stocks from Robinhood to M1. So I really think that starting this month, you're going to see more dividends coming in on the M1 side. But so far for the month of February, I've earned $126.34. That was from the 2 dividends you saw come in from CVS and Verizon. So that gives me a total of $728.13. Not bad, guys, considering in 2021 for the entire year, I earned just under $1,400. So I'm halfway there to beating the total of 2021, and we're not even completely through February. Let's go ahead and take a look at what's projected to be paid for the month of February. And again, if we go to track your dividends, and if I go to upcoming dividends, again, some of this information I don't think has been updated in the payout calendar portion. Some of it might do because maybe M1 or Robinhood's not reporting correct information. But according to this, I should see just in M1 $586. So if we look at Robinhood, February, I should see about $300. So I think we're on track to see at least, I'll say conservatively, $750 to $900. I don't want to look at this and say with certainty I'm going to receive that much money, but you guys see here I am on deck to receive dividends from some big ones, right? Verizon, CVS, Starbucks, Apple, EPD, Maine, and so many more. Now, before we move on from dividends, you guys know my motto is small goals, big victories. And I want to share one of those small goals that I am counting as a big victory. Let's go ahead and head back to the dashboard. And I want to show you guys here in my M1 accounts, if I sort on annual dividend income, you guys will see every single stock in my M1 portfolio, I am currently earning more than $1 per year. That's fantastic. And so that was a small goal that I had going into this year. I wanted to earn at least $1 in annual income from all of the stocks that I currently hold in my M1. So now the goal is to reach $4 from each of the stocks that I hold in M1. Why $4? Well, all of my stocks in M1 pay out on a quarterly basis. So even though I'm earning, you can see here, Visa, $1.87 a year, if you were to divide that by 4, then I'm technically receiving under $1 on a quarterly basis. So I want to go ahead and get these last 3 stocks here in my M1. That's Visa, Walmart, and Texas Roadhouse. I want to get all of these to a minimum of $4. That would mean every quarter, with every stock that I own, I am earning at least $1. You guys can see here another small goal, big victory, is I currently have nearly 1 full share out of all of those 41 holdings that I told you about in the M1, the exception being AVGO and McDonald's. So this is another small goal that I have. And if you guys are beginning your investment journey, this is a great way to stay motivated. Don't just be fixated on the final dividend number, right? Everybody wants to retire making $70, $80, $100,000 a year. Find some reasonable goals that you can set along the way. And it could be as simple as, hey, I want to get beyond just a fractional share of all of these stocks. I want to own 1 complete whole share. And so that's certainly a goal that I have here with AVGO, which by the way is rather expensive per share, and McDonald's as well. So moving on from dividends, let's see how the month of February started off with selling options. You guys know last week I had some stress with that one particular covered call on Tesla, in which I had to buy to close at nearly a $5,000 loss. But January still finished on a positive note. So you guys will see I made just over $3,000 selling covered calls. I made over $1,800 selling cash secured puts. That's a grand total of $4,800 in the month of January. Let's see how things are looking though for the month of February. And one of the problems I continue to face is the increasing share price out of all of the positions that I have sold covered calls against. So that means anything that you see in an orange field, I had to roll close that position. And as a reminder, when you roll close a position, you are buying to close that contract, typically at a loss, and you are opening up a new position and you hope to earn net positive premium on that transaction. So go ahead and take a look here, guys, at all of the covered calls that I bought to close, right, from the earlier week, and I opened a new position. Apple, AMD, Amazon, Best Buy, Google, Microsoft, Starbucks, Target, IWM. These stocks continue to see a very rapid increase in share price, which means if I don't want those shares to be called away, in which I don't, I have to roll that position to a further out date with a better strike price. And some of these dates, guys, I am clear out in the middle of 2023. Some of them I've had to push out as far as 2024. So you see here, Starbucks and Target. I am going to be on the sidelines with these 2 stocks. Again, I do not want these shares called away from me. So in order to avoid assignment, I had to roll close these, clear out to January. So again, it's just one of the things that happens. I don't think anybody expected the strong rally that we've seen. And if you are selling covered calls or options for that matter, that's going to have an impact as well. So if we know when you roll close a position, if we know that you are buying to close at a loss and you are opening up a new position, we now have to tally January and then factor that in with February. So let me go ahead and highlight every single covered call that I sold in January. And because I have now bought to close these contracts, I have to input the new information. And you'll see here, technically in January, I have now incurred a loss of $14,000 plus. So let's go ahead and enter in this information. That's $14,494. And you would think, okay, that's positive, so I need to redo that actually. Minus, sorry, $14,494. So just looking at this, you would think, oh my God, Wayne, you have lost nearly $12,000 or nearly $13,000. But we need to now go ahead and put in the February numbers because again, these calls were technically open in the month of February. So now if I highlight these new positions, you will see here that I have a total of $18,243. So let's go ahead and put in those new numbers, 18,243. That's for a total of 16 contracts. And you guys will see on the covered call side of things, I now have a yearly total of $3,700. If you add that with my cash secured puts, that's well over $5,500. And so again, that's why you can't necessarily look at 1 month, especially when you have a month like January where everything has gone up. I mean, when I look at this, you'll see here, it happened to me in July of 2022. Typically when you see a month in which you incurred a loss, that generally means that you're going to see, right, that number be higher the following month. That's what you're seeing right here. I have closed out my January positions, but in doing so, I had to roll close, which means there's technically a loss for January, but now I'm seeing more net positive premium in February. So not too bad. Thanks for following along on this week's update. I hope you guys are enjoying the content. We'll see you soon. Thank you so very much.